well Friday. Today, not giving it back, but we're not doing much. I know the bond market's closed, so take the day what you will. So take us out where you see things headed.
I'm actually not sure. I mean, I'm underwhelmed. If the market's not underwhelmed,
most honest answer ever.
Well, yeah. I mean, I'm underwhelmed, nonplussed, whatever you want to call it, about the trade deal. I think it needs a lot more work. It does look like it was more of a PR event than an actual sign of progress that's being made. China came out this morning through its official newspaper and said more talks are necessary.
I think hold the champagne was their quote or something like that.
Yeah, and they also didn't commit publicly to anything that the president said they committed to, which is agricultural purchases, intellectual property protections, and the like. So I don't know that there's anything definitive. Maybe over the course of the next 4 or 5 weeks, as the president suggested on Friday, pen will be put to paper and we'll see some details. But right now, those details are quite fuzzy.
All right. So here's the dirty question, Joe Terranova. Does it mean this is actually all about fundamentals? Will earnings matter here longer term, not just on an individual day trade, but matter going forward when we've still got this overhang of the trade guillotine, if you will?
Yeah. So will earnings matter? The earnings will ultimately always matter. But if you think about this time last year, earnings were incredibly strong and the market peaked. So earnings can be somewhat confusing. I think you're on the top line. You're going to see a little bit of a struggle here during the earnings season. As far as revenue growth, you're probably going to get your 5 or 6%. That's probably going to be where the numbers are going to come in. There are going to be some sectors that are going to disappoint. Certainly financials look like they're going to disappoint. Energy is going to disappoint. But I think the expectations have been lowered, and they've been lowered just enough to keep the positive momentum going on for the market overall. Listen, as it relates to the news that we got on Friday, truce, that seems to be the word. That seems to be enough. If you're a trader, if you're an investor, whatever your focus is, you cannot get too involved in these headlines. It is going to disrupt you from ultimately what is going on in the markets. And the markets continue to, for whatever reason, maybe it's a limited supply of investment vehicles and strong demand, whatever the reasons are, though, we continue to see multi-assets performing well in 2019. And just look as Apple as an example. Apple, 238, could be the proxy for the entire U.S. Chinese trade dispute, but yet pressing towards all-time highs.
And Skyworks Solutions has done great as well. And Keith, you guys, so it wouldn't be a show if we didn't have an acronym. You guys have a good one, METER.
METER, yes.
Right? And M is monetary policy. E is earnings. We can get to the T. We can talk about trade in a minute. You believe that the E, the earnings expectations this quarter, are a little too negative or pessimistic. How come?
We do. I mean, right now, we believe the consensus is somewhere between -2% and -4%. We just don't see earnings coming in that manner. We expect earnings to probably be more like flat, if not up a little bit. Joe made the point. Right now, the sentiment in the market is so negative, whether it's on trade, whether it's on earnings, whether it's on the Fed. And I think what that has done is set us up for nice moves in the market, which you saw Friday, when you get a little bit of positive news. And Friday with the trade was a little bit of positive news. We never thought we'd get the grand deal. We always said it would be a truce. But the one thing you got to recognize, we went from escalation to de-escalation. Admittedly, step one in a multiple-step process, but that was enough on Friday to give us a nice pop in the markets.
Yeah, and how much of that earnings pessimism, though, if you've dug in, it comes from energy, which has just been, decimated. The numbers are going to be terrible.
Well, I think that's certainly part of it. But I just think people right away are expecting the glass is half empty. And so I think that's the lens through which most investors are looking at it. We've had continued major negative flows out in equities. So, again, we think we're setting ourselves up for some positive news, not to mention the fact we think the Fed will continue to do what it's doing, and that's very important as well.